Hello, welcome everybody. Guess what time? Oh, there goes the bell. It's 8 o'clock. What's that mean? It's Pug Night. It's Persons User Group Customer Appreciation type webinar. We do these once a month. General guidelines is people, clients, customers, friends, family members, or as the CEO of Target referred to his clients as our guests. Still didn't get an invitation at Thanksgiving at his house if I was a guest, but in either way, welcome everybody. The format, generally speaking, is we go over Persons User Group is a format where we discuss indicators or tools relevant to anything that I've created or put out and have on various platforms. Some people have already sent in questions ahead of time. If you're have a question on an indicator, a question on a tool, how to use a scan, then simply type it in the room in the webinar mode, and we will try to get through that. We already have a few questions that I know someone in the live trading room wanted to see the performance of what we've got in the algo room version of our live trade room. And we can certainly go through some of those. Another individual asked me to go through a list of stocks and what it looks like with the indicators. We also have another individual who wanted me to run through the scans on Thinkorswim and how to set those up. So the first thing we're going to do is to go through the scans. The second thing we'll try while we go through that function on Thinkorswim. As well as maybe give we just did a presentation and a workshop on volume. So with that said, we did a comparison of using volume histogram bars versus on balance volume and the tools that are available and how to run scans. So we just did that workshop about a week and a half ago, I believe it was. But we will go through how to run scans and just add that little extra filter with the on balance volume. In this environment, it's kind of a crazy world in which we live in. Jerry has asked me to go through a bunch of stocks that I'm going to bet if my wife gave me my allowance, which isn't until Friday because I'll probably blow it on bait. Just joking. I would bet that the stocks they're asking for me to look at would be Wall Street Reddit bets, because AMC, GameStop, I know for sure. JMIA Technologies is definitely another one. NKLA is definitely another one. So, and Mankind, I think, is a biotech. I don't know the other two, PETQ and GDRX. So, Jerry, I'll go through some of those names. There's nothing to cover. These are what I would consider social media phenomenon stocks. I'm not sure I've ever been able to, it's a whole nother subject about those particular stocks, you know, how they're able to, you talk about an unbelievable world of trading, how you take a stock, like in the case of GameStop, a company that's damn near bankrupt, $6 trade, people figure out there's a short squeeze and hedge funds are short, and you mass millions of people together, all invest to gang up against the short seller, and how the stock still stays up, you know, over $200 is just, it's fantasy world. It's crazy. But anyway, I will go through this. So it's not my specialty to this phenomenon that none of us have, well, first off, none of us have really traded in a pandemic environment with the amount of trillions of dollars of stimulus money being thrown at it, or an environment where we have price to earning ratios that are, you know, that again, most people don't care what they are in this environment until they do. And there's only one thing that's going to make people care about some of these lofty valuations. And as I think today, we marked the 51st new high, all-time high in the S&P 500. I think today was the 51st. I thought it was 50. I think Andy in the live trading room corrected me. It was 51. So whatever the exact number is, it's still staggering to see new highs in this environment. There's only one thing that's going to take things away, and that's competition. Why would someone not want to invest in a stock? It's because something better comes around. Either a better company comes around, the company doesn't make money, but that doesn't make sense either, because there are companies that made money, beat earnings, and the results, they were sold off for XYZ reasons. So we saw that today with Nordstrom's, we saw that with Disney, and then some companies, again, even Salesforce, which was rewarded a little bit tonight after earnings report, which I didn't find to be staggering, but needless to say, it was up about 2% or something in the after hours market. So anyway, Andy, welcome tonight. Julianne, thank you you guys get enough of me during the day. Bonnie, I can't believe you're with me. And Jay, I'm doing wonderful. Jerome, I hope you're okay out there in California. You keep us posted. Best damn eggs Benedict I've ever had. It was going out visiting you when you took us to the, oh gosh, what's the name of the place? I had it at the tip of my tongue. Any event, I do miss the traveling. And so with that said, let's get into tonight's presentation. First off, we just a disclosure, trading involves risk of loss. And what else? We're going to get some house cleaning out of the way. Announcements. We do have a live online trading event in October. Delta variant or not, down here in the state of Florida. Vaccines obviously are welcome for all attendees, and we don't do them, but we're not giving them, I mean. But they're pretty much all over the place, so please feel free to be vaccinated when you come down. Masks at this point in our state, not mandated, but if you want full information on our 2-day live seminar in the state of Florida, we will be, it is on our website, by the way. And so some would go, are you out of your mind? You're still doing a seminar in COVID times? Well, we kind of planned this out thinking that with the vaccines, things would be, by this time, we would be pretty safe for getting together. So long and the short of it is, if you're interested in not attending live, this is where you can find it. I'll push that into the live trading room to find out more information about it. And if you're live trading seminar, we'll also be broadcasting this via, I believe, Zoom. And that would be another way if you're interested in attending. Live trading seminar link, and you can go read more about this if interested. And I always find live seminars enjoyable. So in any event, let's get into the first thing we want to cover. Let's go to Thinkorswim. We got Apple up here. All right. So we're using Thinkorswim tonight, and we're going to use TradeStation in just a minute. So the first thing that we're going to look at is kind of combination. Generally speaking, my format of the indicators that I use would be the PPS indicator, which are the buy and sell arrows. For stocks for higher time frame trading other than day trading, I would use the PMC indicator. It's a relative strength tool. It gives us an idea, and there's 4 colors. There's red, there's fuchsia, there's bright blue, and dark blue. When a stock or an instrument is starting to outperform relative to the overall market, it goes bright blue. That means that there's a very strong trend. And also we look for, as we discussed in our last workshop, strong volume participation in the means of on-balance volume. During that seminar or workshop that we conducted, we also shared with you how to run a scan. Now, I'm not going to get into all the nitty-gritty details. However, I've already taken the liberty, because what I like to do on a daily basis is I like to run scans. And as many of you are familiar with the TradeStation version that we have, because you have the TradeStation package, we have a lot of information on a radar screen. The first thing that I look for, I don't have on-balance volume on the radar screen. What I have is listed the current volume and I compare it to the 10-day average volume. And what I like to look for, just as a general guideline, when I'm looking for stocks, the first hour of trading, what I like to look for is heavy volume in that first hour or within the first 30 minutes even. And what I'm looking at is if, for example, today, Citibank or Citigroup, Citi today, its 10-day average volume is 15 million shares. Without earnings or anything else out there, today you can see we did 19 million shares today with an average. So today's movement came after yesterday's key reversal PPS buy signal. And Citi actually had some pretty substantial volume. It did better than its 10-day average by about 20%. Now, what I'm seeing a lot of times in the market, instead of looking for unusual volume activity, first, I'm looking for unusual volume activity in an underlying equity, because generally one is the leader and then the options are the follower. That's not always the case. Sometimes someone wants to see something big happening in the market. They have to buy, they go and buy an option because they have maybe better inside information. Maybe they just have better information. But I want to also let you know how you can find good volume setups, whether or not what came first, the chicken or the egg? Did someone find, if someone's got an opportunity and they see something going on down the road a bit and they buy maybe an option because they think that something's going to happen a week from now or 2 weeks in an individual stock, if they start to buy the options, just remember this. If there's, for every buyer, there's a seller. And any market maker that's going to, if someone says, gee, I have inside information, I've got the earnings report on AMD, they're going to knock the ball out of the park. Somebody stole the information from the photocopy machine room at the accounting department, and someone gave it to the secretary gave it to somebody, and someone gets it, and I got it. All right, this is all fictitious. I'm making this up. But I'm just saying, as a case study, as an example, somebody gets insider information, or somebody has information, and maybe the FDA is going to approve something or not approve something. And all of a sudden you get, a report that there's heavy call buying. If there's somebody's doing heavy call buying, then somebody has to sell that call option to them. It's not a matter of a bunch of little one-lot traders selling 10,000 calls because they just woke up one day and said, hey, I want to start writing options. An institution, a market maker, would sell and make the market and sell those premiums. But no institution wants to sell something that big in size without having a hedge or some protection, because they definitely don't want to go out of business. What do they have to do? If you're short a call, you'll more than likely offset some of that risk by buying the underlying instrument, right? So if you sell upside call premium and you're like, I'm not worried about it, maybe I have to have a portion of the position hedged. So if I sold 10,000 out of the money, 40 delta calls, 2 weeks to expiration, then I might have to be, in perhaps 1,000 shares or 2,000 shares of the stock, or some type of measured percentage of covered position. You'll find that if someone did that trade, they have to go and buy the stock. So you'll see stock volumes. You'll see the volume in the stock start to accelerate. So again, what came first? Unusual option activity, or there's heavy unusual volume activity in the underlying stock? So one goes with the other. Okay? So bottom line, if you look at what I look for is unusual volume activity. And if I see something for the first hour, one of my casual observations is in the first hour, if I see something like 50% of the 10-day average volume is done in the first hour, that's something unusual. All right. Generally you see, maybe, the first hour of the day has got some decent volume. The second hour has got some decent volume, but the third and fourth hour is lunchtime. Things calm down. And then the last hour of the day, that's when they really pack it on. But we've had quite a few unusual moves, and we can pick that out by looking in the first hour of trade. And one of the things that I look at, and I have this for this reason, the stock short-term page is already set up for 60 minutes. And I like to see if there's unusual volume activity. And this is over the last 10 hours. All right. So this is a 10 period. If the period is 60 minutes, that's 10 hours. So if I get a, for example, a pretty decent move on it, I can also look for an intraday basis by hour and say, gee, here's something. This is Red Rocks Casino, by the way, and you can clearly see it did probably 50% better option volume or better volume today, at least in the last hour of trading. We had the last hour of trading, someone really packed on a good volume punch there on a breakout in the casino sector. But needless to say, that's one way to say, hey, listen, is this just a one-day wonder? Is it a one-bar wonder? What is the volume action? Because generally speaking, volume does precede price. So, instead of having fancy software, we actually can compare volume and look at to give ourselves an edge. It doesn't mean that the next day it's going to fail right back down, but the odds are if someone has taken the initiative to buy into a stock and over time the volume's looking wholesome. And by the way, I'm just going to pick on Range Resources because, well, it just popped up right there. One of the interesting aspects about and this actually is a really good segue into looking at Thinkorswim in just a second. So I have a volume indicator, a proprietary volume indicator that's kind of a momentum, and it's based not just on actual volume trends, but the percent change of volume. And what it does is it helps to illustrate maybe perhaps more in uncover bullish convergence and divergences. Obviously, if we're in a trend where the market is in a downtrend, and all of a sudden we start to get buy signals, and we start to look at that buy signal, a 60-minute buy signal. If you're looking at the casino sector, you would say, hey, maybe Range Resources would be okay. Here's a scenario where running a scan on a 60-minute basis would be fairly helpful to find out if this has got legs, so to speak, right? So bottom line is, if you're looking at a trade, and one of the things that we discussed the other day, and I want to get into exactly how to read OBV, but bottom line is, I always, just as a quick reference, I like to compare the actual volume levels with the print of where prices were and the last time there was a prior low. The irony is, here's a read where the on-balance volume reading on August 10th, when the price was trading at around 44, the market comes all the way back down to around 39 and change, 38 and change, excuse me, and the volume level is higher and didn't see any deterioration. In fact, even our volume indicator starts to pick up that little convergence pattern, and you start to see everything turning green and firing off and going positive with the trend of the market. If it's true that volume precedes price, if you notice that the previous high or any previous post or high in on-balance volume, we exceeded even my volume indicator. We started to exceed, volume started to lead. In other words, it broke out above its old highs before the price broke out of its old relative high, relative to this chart that we have in front of us in the time frame that we're looking at. This peak high here, on balance volume, took out that time period's high. Volume led price. So there's an old phrase in technical analysis that says volume precedes price. So volume goes first, price is second, and it shows the participation. So when looking at, I didn't invent on balance volume. Joe Granville did. What I did is I just came up with the idea of being able to track it a little bit better when I was doing a lot of stuff. And I know, Jerome, you were out there at that options. I think that was back in 2008 or 2009 when you guys had me speak, I think, out at that the option group out there in, was it Santa Clara, out there. and I was teaching people back then about on-balance volume and how to use it on the Thinkorswim platform. And so long and the short of it is, it's been something that's gotten a lot of legs, and I think it was maybe considered a lost art. Not a lot of people gave it a lot of credibility because, you know, people were still teaching how to use volume histogram, which to me I think should be outlawed. But anyway, because it's not effective. So let me double check and just validate that statement if you would like. So I'm going to go over here to study. I'm going to add a study, and I'm going to throw up, I mean, not literally, but I'm going to throw up, not throw up physically, but I'm going to throw in volume. Got to be careful of what we say here. So here's a volume histogram. I'm sure you might be just as confused at this, because quite frankly, all you see is like an electrocardiogram. It just has these little spikes. I mean, I'm not sure what you want to, what the trend of this would tell you. I mean, it generally speaking, I guess you could argue that there was a heavy volume and the market went down. There was light volume. It started to trend up a little bit in here. There was one big volume on that bar on an individual 60-minute. But other than that, I'm not quite sure what that histogram really tells much of anything these days, right? Clearly, the on-balance volume is something that shows that it's rising. It's got higher highs and higher lows. You can clearly see it's trading above a rising moving average. And more importantly, you can see the same thing a little bit more clearer with our volume indicator. It's bright green, the histogram is positive, and the trend is up, and there's volume accumulation. That shows that there was strong participation in pushing up this space. You know, the other day, instead of going with range resources, just for the record, we sent a little email alert out early in the day and tried to get in and wanted to jump on part of a different stock, but in the same sector. It was MGM. And I think we missed it by, I don't know, it was a little cheesy. So, you know, we missed the entry. That's it. I sent an email alert to look at getting in on an entry on MGM. And we did miss the entry. The volume was looking okay. And in comparison, we'll take a look at, by the way, I'm not really cherry picking as much as I'm just going over stuff that we just put out. Clearly, there's a volume upside movement, and it was starting to show good participation. So some of you that are on our email list for the advisory service or in the live trading room, you know, we were in a buy. We've broken out above pivots. The pivots was projecting higher highs. You can see the red here is greater than that day. So we were sitting in a potential for the market to lift off. Volume did precede price. So bottom line is, when I'm looking at a trade, the first thing I do is look at volume as a leadership. And you can compare in this day and age, you could still, instead of looking for every, you know, unusual volume activity, if there is recently, there have been some really decent setups with on-balance volume and our own volume indicator in this environment. Now, how can normal people that don't have that package take advantage of it? Most people have, and by the way, so we go over here, most of my charts, and this is without having to change things up, this is a page that we project in the live trading room. We have two rooms on at the same time. One's a stock and position trade and option trade page. This is what we call the main room. These are the stocks or what we're looking at, entertaining or trading on. MGM, that was, you know, one of the reasons we had MGM up. Looking at that was Airbnb was another one that we picked up yesterday. The first hour of the trade yesterday had extremely strong volume. Another one, Tilray, another one, I think today we were picking up for a breakout on the bottom, Sam Adams for an upside movement. And CRM, unfortunately, the market was sideways. The market just didn't give me, we're long the stock. I made the decision that into earnings, we were not in an option. We were in the stock itself. It was a small position. And I made the call, you know what, the way things can open, they may have beat top line, bottom line, give poor guidance, go left, go right, hut, hike. I really didn't have a great technical read on the stock. And so when in doubt, get out. And I pulled the plug on the trade. Stock's up in after hours. So you know what, maybe I could have hung in there. And, you know, it won't be the last time I get out of a trade early with a profit. It won't be, it's not the first time, it ain't going to be the last time. But what I'm trying to achieve in the marketplace is to give myself an edge with logic and testifiable evidence on the condition of a marketplace. So in pulling up scans or saying, gee, what does the market look like? Now, if a market's really strong, as if it is like right now, and we define strong by, well, the 51st time this year it's made a new high, it's kind of defined as strong, right? The advanced decline comparative ratio line readings, which I'll bring up for you. Another little thing that I do. This is an advanced decline breakdown page. It lists the Dow, the Qs, the Spider, and again, the Russell. We list what I did is I took Sherman McClellan's idea of the McClellan oscillator and I modified it a bit, changed the moving averages a bit, and broke it down so that it's an indicator, a momentum indicator of breadth. But instead of what the McClellan oscillator broke the data down from was from the New York Stock Exchange Composite Index, which we don't trade. And I broke it down to getting data from the Dow Jones Industrial Average. I got it going for the NASDAQ 100. I got it for the Russell, and we broke it down for the S&P 500. Now, that's a different tool, and that's a breadth analysis tool. But when we look at the overall market, the subject that I was pointing to is the market is still strong as measured by the advanced decline. We've had some pretty wild swings with the advanced decline in the Qs. You know, we have been making lower high, lower lows, and then all of a sudden breakout trades, breakout momentums. The volume's been pretty good. My volume indicator, though, is starting to show a kind of a relative weakening volume condition, and I guess we would say the words divergent up here at this high right now. The McClellan oscillator, by the way, according just to give a conditional ranking of the market, is starting, it's not near an extreme high, but it's near an average, it's nearing. So another day or so of if the market and the breadth gets a little too strong, it gets what we call overbought. And then we've been only seeing these little, 1 to 2% or 3 to 4 day pullbacks in the Qs. So when we get into these overbought readings, we really have to be watchful from when a market goes from overbought, for example, to oversold in a very short time, and it just swings back and forth. So this has been a very dynamic, unusual market event. I guess at this point, I could just tell you that the market, based on the advanced decline and the OBV, even my volume indicator at this point is strong. It's going to take a couple days if this thing ever does see another pullback. It's going to take a couple days to unwind and unwork this positivity of the performance in the breadth. That's just why I defined it as a strong market, okay, right now, right? So I just want to put clarification of when someone says it's strong, what are you measuring strong from? The fact that it's at its all-time high, the fact that it just made its 50 some odd new high for the year. No, I'm giving it qualification based on the performance of the condition of the market, of what makes that index up. A group of stocks, namely in the Qs, 100 stocks, the average of those stocks are all rising, and that's why we get an advanced decline cumulative ratio line at newer highs. So it's confirming this is a strong market. So that's the Silicon Valley Options Group. Thank you, Jerome. All right, next. So I wanted to, when I make a statement, I just wanted to make sure I'm clarifying when I say strong. I guess maybe I'm being too detailed orientated. Define strong. The market went up today. Okay, well, that'll work too, I guess, right? All right, how strong is the market? At the end of the day, we'll start looking at a couple things here. If you're wondering on both at the beginning of the day, the middle of the day, and the end of the day, you have the ability to find out. Now, it's not expressly one click, but using my indicators on Thinkorswim can be done relatively easily. And so first and foremost is how strong was the market closed today in the S&P 500. The irony is that we ended up today with, and you'll notice here it says sell signals, and you have S&P 500. One of the beautiful things about Thinkorswim is they actually have an incredible scanning function, which allows me or you or any user to scan by an industry group, a subsector, whether it's energy equipment, services. I mean, you can get down to oil and gas. I mean, you could really, no pun intended, drill down to the specific subsector you really want to. You can get down in industrials, aerospace, defense, machinery, airlines, marine, road, transportation, infrastructure, whether it's airport, highways, marine. I mean, they really added to this function of industrial. So if you're just looking for transportation, whether it's, you can go sector specific. So basically, I'm just using the S&P 500 right now. By the way, this is when you would probably go by an industry group. If you are familiar with seasonality studies. So one of the things that is kind of nice to look at. Now, again, this is not picture perfect, but it definitely gives you an edge. So what I put out almost every month, it's a weekly newsletter, but we have a sector this year and last year, thanks to the pandemic, seasonality's been a little off for a few markets, okay? Obviously. But on average, and again, this is not your average year. Last year wasn't your average year. I'm not sure if next year is going to be an average year either. But when we get back into more normalized markets where the Federal Reserve isn't manipulating interest rates to zero and all central bankers, when we get done with throwing enough stimulus from from Washington, for example, when we start getting, for lack of anything else other to trade, then we look at sector seasonality. And I always tell people seasonality works, but technicals supersede seasonalities, and there's always something that can throw off or skew your seasonal trends, right? Many years ago, we had this little event in the Gulf by British Petroleum. It was a small little oil spill. President Barack Obama put a moratorium on shrimping and fishing in the Gulf. That happened in the middle of the summer. Funny thing is, most people don't realize this, but it was something I knew because I'm in the business, is that soybean meal shot up like a rocket. Now, why would soybean meal shoot up like a rocket? And I'm here to tell you why. Because we used to feed, animal feed used to be, they used to use ground bone meal. Bone meal caused that little thing called mad cow disease. So that got ixnayed. What do you think as an animal feed other than sorghum, which is a mix of soybean meal, what do you think the competing product is for soybean meal for protein for animal feed mix? It was shrimp shells. What do you think they do with all of those shells from all the shrimp we eat from Shrimp Cocktail? They grind it up. Purina buys a bunch of it. Boom, it goes in, and other feedlot sources, and that goes into animal feed. These are little industry secrets. It's not something you read in the funny paper in your local newspaper. This is kind of knowledge, industry knowledge that you have to know. So again, that's something that you wouldn't have known unless someone told you. The point that I'm making is traditionally the soybean and the soy meal market go down in July and August. They don't really go up, they go down. But that year it exploded and people couldn't figure out, which we all knew at the time, what the reason was. So again, I'm giving you a specific example in our history books of where seasonality doesn't work all the time. So you take seasonality, but you use technical analysis to confirm. So let's say, for example, you really feel that, well, for right now, copper's come off its highs, consumer staples are a little weak, semiconductors certainly aren't weak. Steel, if they're weak right now, I can't wait to see what they do in a strong seasonal sector period. But let's say, for example, you're bearish on a sector or bullish on a specific sector. You can target and highlight and stalk and run scans if you're bearish a sector, and go into specifically looking and targeting that sector using the Thinkorswim and say, show me how many daily buy signals or sell signals exist in that space on a daily basis. All right. So that's one way of looking at using a tool like this and saying, well, what am I scanning? What's the denominator I'm using? And in this case, we're using the person's pivot study. How you find this is you go under license studies. And in this case, you can go either the PPS buy or the PPS sell. Now, based on today's close, it was fairly strong. What I did was I wanted to find out exactly how strong was the close today. And did we formulate a lot of 60-minute, if the market's really strong, I'm not going to be able to look for buy signals because they're probably already in a buy. But if the market's really strong and yet at the end of the day we generated a lot of new fresh sell signals, that would tweak my interest. And that's the rationality. That was a very important sentence. I hope everyone caught that. There's no reason to run a scan when the market goes up because the market's already up for buy signals. How are you going to, the market's already in a buy mode, it's up. But if the market's up, then you want to kind of do what is counterintuitive. Look to see if there's any sell signals, because that'll give you some, wow, that's an interesting. Now, 60-minute sell signal is not going to put a long-term top in the market, but a 60-minute sell signal followed by the next day of more stocks in that sector generating sell signals. And then if those cascade from a 60-minute sell into a daily sell, now you got a different story going on. You know, it's interesting at the end of today, by the way, and I just want to point out the additional feature that I wanted to share with you in tonight's discussion is how do I maybe filter out a buy or a sell signal a little bit better. And if the topic was using volume, then we can actually just add an extra little tool and use on balance volume. So what I've done here is I'm looking at a 1 hour, and you can change the time period over here. I'm using a 1 hour because, well, the last hour of the day is really a half hour, okay? But the last half hour is considered an hour. And so I'm also looking at if a sell signal, then I want to see on balance volume scan decreasing. So the on balance volume trend tool, if the price is going down, did it go down on heavy volume? And the way on balance volume works is it calculates the volume from one period's close to the next period's close and assigns the entire volume to that time frame. So if the bar closed lower than the prior hour close, that's a negative, and so the line would be down. One bar lower in volume does not really mean much, but 3 periods would be 3 hours. If the current bar on balance volume is decreased over the last 3 consecutive bars, that says that these stocks generated a fresh 60-minute sell signal and the volume's been deteriorating throughout the last 3 hours of the day. So therefore, that tells me, gee, maybe tomorrow we might see a little, possibly some of these sectors or these banks. Now, the thing is, we just saw Citibank a few minutes ago. I just shared you with Citigroup. Let's bring that back into picture. So Citigroup, and again, we're comparing Thinkorswim with TradeStation, 10 to 1 or the other. So funny thing is Citigroup had some pretty big volume today, but in the last hour, the volume trend started to show some relative weakness. and let's double check what the scan revealed. It just specifically said that on balance volume was lower than the prior 3 bars earlier. So 1, 2, 3 bars earlier. So the criteria was correct and is met. The current volume was lower than 3 bars ago. In fact, it's the volume action reading is back to where the market pretty much opened. So it's, to me, the way I read this is the market got maybe a nice gap higher, and in the last hour, there might have been some selling pressure, some profit taking on Citi. And that would make sense because here we are against a potential double top or a prior high. So tomorrow, I would be watchful to see if this stock, if it negates that PPS sell signal, in other words, goes into a buy and a rising volume, I'd be more inclined to say, hey, that's maybe I'll buy the pullback. This is also a good way of saying, do I feel like buying this stock? I don't want to buy a stock that just dropped on, gave a PPS sell signal, and they just sucked all the volume out of the trade here. So again, this is just looking at the condition of the market, running scans using our indicators. I'm just using one indicator with an extra filter of, I don't need a MACD, a stochastics, a price oscillator. I'm looking at the condition. I want to see how many stocks generated an official sell signal on a day like today, and was there any strong volume behind that sell signal? And that's what this setup shows you on how to use that. By the way, just to be fair and impartial, let's go to how many buy signals ensued today. And then if you're going to look for a buy signal, don't forget, and you're using the on balance volume filtering tool, don't forget that for buy signals, you're looking for volume to increase. Now, I use three blind mice, 3 rub-a-dub-dub, 3 men in a tub. Three is a Fibonacci number, 3 hours. We're doing a daily, and when you change the structure from a sell to a buy or a buy from a sell, make sure that it defaults back to daily. So don't forget the changes back, so that you're comparing the same time frame of the PPS signals to the volume signal. All right. So the moral of the story here is now we're looking for, we've got everything lined up correctly. I'm looking for a PPS buy. I'm looking for buy signals that had an increase in volume, and the volume now is greater than it was 3 bars ago, or it's risen 3 consecutive bars, both on a 1 hour time frame, and hit scan. Yes, I'm asking for a lot, but do it anyway. At the end of the day, unfortunately, Etsy, CRM, I say unfortunately because we got out at CRM, but that's okay. We made a profit, but still, I left money on the table. It generated a new fresh buy signal on the close. Dirty rat. Well, never mind. I won't say it. CRM, Etsy, out of all the S&P 500, there were no new fresh buy signals. If you wanted to be a little bit more inquisitive, I generally, just to let you know, I like to run the Russell 3000. Most of the stocks in the S&P 500 are in the 3000, and so you can. It's just you're asking for a little bit more information. And so today we had, at the end of the day, we generated a new fresh PPS buy signal. And what's interesting is you can kind of get down and see if there's a heavy concentration of in what sector. So you had some software, CRM, Workday, so you knew that software applications all kind of tended to do a little bit better today. All right. If you go and let's change this up and go back to sell signal, go back to on balance volume scan. We're going for sells. What do we need to do? Go to decrease. We've got daily now because we just switched it. Go back to 1 hour, 1 hour. So we're comparing hour to hour and run a scan. So if you want to say, hey, the advanced decline was strong today, but how did we end the day? And at the end of the day, we ended up with 609 out of the Russell 3000. 609 stocks generated 60-minute sell signals at the end of the day on pretty decent confirming volume. So I mean, if this cascades tomorrow into a first hour sell, if this cascades, as you can see, lots and lots and lots and lots of banks, small cap banks, thrifts, mortgages, capital markets, smells like interest rates to me. Oh yeah, maybe that little event there that's going to be online. It was supposed to be in person. It's called the Jackson Hole, Wyoming Fed meeting symposium. Insurance companies, they might be considered to be interest rate sensitive. Mortgage real estate investment, maybe they're considered to be interest rate sensitive. And then ironically, a lot of looks like semiconductors. So it looks like only NVIDIA is the only semiconductor company that's going up forever. Sorry for the sarcasm. Equity, real estate, REITs, lots of REITs. So there was a strong concentration, what it looks like, of liquidation in interest rate sensitive names at the end of today's business. And so if you wanted to look and get a jump ahead at the market, here's another interesting, important detail you need to remember. If you run this scan before the end of the time period, so just remember, this is a 1 hour bar. The market closes at 4 o'clock. If you run this scan at 3:55, that's 5 minutes before the market closes Eastern Standard Time or Eastern Daylight Time or Eastern Time, okay? Market time, New York Stock Exchange, New York time. If the market closes at 4 and you run this scan at 3:50, it's going to tell you if the market closes here or at this level, these are the results. All right? So if you want to get a lead as to where the new buy or sell signals are coming in at the end of the day, you can run this scan prior to the close. And that'll give you a good read or setup of what stocks or maybe are starting to see, and maybe give you a heads up that if the market's running out of steam. Another thing you can do is just simply go to daily and then change it all to daily and hit scan. Instead of looking at 60-minute, now you got daily, and this will give you how many stocks are generating new, fresh daily sell signals with decreasing volume, meaning there's some heavy volume selling. All right. So this is kind of like, obviously, we've got Nordstrom's, that was bad earnings, American Eagle Outfitters. It's probably a little bit of sympathy selling with Urban Outfitter, which, again, had all bad reactions, which were fairly good earnings with, as far as people were concerned, with top line, bottom line. Just, they couldn't, the market traded a little bit differently than what people would have thought. In the meantime, when we look at how to run these scans in the market or to look at market conditions, there's several tools which my career has, obviously built upon looking at price and condition of price. Person's pivots for one. Number two, the location of price to pivot. If a market's in a decided negative downtrend where it's trading below pivot, which is what these fuchsia lines are. These are actually person's pivots. When we get a buy signal, like for example in Ford, and we say, hey, we got an uptick in the volume trend on Ford, right? And then we start to look at the first hour of volume starting to pick up. We could say, hey, let's take a look at maybe the options. And then all of a sudden, now I see, oh, look, all of a sudden there's a volume surge on a specific strike price. It mirrors what the technicals look like on the underlying market. It gives us a better read on what to look at. So I wanted to make sure that in tonight's presentation, we definitely follow up how to work a scan using Thinkorswim, using the person's indicators. It's quite valuable, and it's a phenomenal tool to have to find out what is the overall condition. For day traders, you can obviously use this for a 3-minute time frame. And then, whatever your time frame is for stock and equity trading, remember this. If you change the sell signal and you change that back over to a buy signal, it defaults to day. So that's probably not a good combination for a day trader to look for, or an end of day signal with a 3-minute volume scan, right? So bottom line is you can run, if you're into trading equities for a day trading perspective, this is another combo that will work pretty well. In fact, this is exactly the time frame in what we did to look for a tradable dead cat bounce, is what we called it, on Sam Adams today, rather than looking at a 60-minute. I mean, hell, a market could go up 20 bucks in 60 minutes. What we did is we broke it from down to a 3-minute buy signal setup, and it worked quite nicely. So if you're into day trading, you can consider, I mean, I just wanted to there are people that do day trade stocks. This is one that you can kind of, if I'm day trading a stock, an individual stock, I'm not quite sure I want to run a scan for the whole sector, right? I mean, I wouldn't know which one to take. But to get a gauge of maybe there's a concentration of buying and selling in an actual group, I think end of day, 4 hour, 1 hour, and end of day are very, very reliable combination and time frames in which to scan for. Okay, so bottom line, just make sure that when you do run a scan with a PPS buy and you're looking for either end of day or intraday, first hour, you could do this as well. Change this. Rather than the first hour, you can go 30 minutes. Just go 30 minutes. Now, on 30 minutes, you're asking for the last 3 consecutive bars. 3 hours is a lot of time for the market, right? 90 minutes, I'm not quite sure is a lot of time. So if you're going to do a 30-minute PPS buy or a 30-minute PPS sell, you may want to jump that number up to, at the very least, what would 3 hours be? 6, right? So if you're looking for like 3 hours and you're using a 30-minute signal, look to see if your 6 periods of 30 minutes would be 3 hours, right? And then you can take a look at that combination. So the logic behind running this function here on balance volume has to do with the amount of time you're looking. Just because we got a 30-minute buy or a 30-minute sell, I want to know, hey, I got a 30-minute buy in the first 30 minutes of the day, but is the volume in the first 30 minutes greater than the last 3 hours of trading? And if that's the case, great. So you may want to kind of take a look at that combination to help maybe determine if there's strong buying in any particular name, or particular if there's a strong concentration in a sector. All right. So I hope that covered that question there. I'll rip through a couple just using my the indicators at hand of how we, first off, to what my assertion of, or if I would examine a stock like an AMC, other than gamble day trading. I just don't have any, to be honest with you. It's nice to know that the indicators, whether it was a daily chart and obviously preceding, just to give you the theory and then put it back into hindsight, the relative strength was improving relative to the S&P 500. The PPS generated a buy signal. The volume was preceding price. It was breaking out. As you can tell, OBV, this is back in May before AMC, raced straight to the roof. So, you have to be on that trade specifically for a good reason. If you're in their community and they all say, hey, buy this stock, it's doing great. Listen, you had a high closed doji pattern. It traded above pivot. The volume was rising. So, the indicators and everything I've been telling you, the relative strength is doing what? It's fuchsia. It's trending higher. It's improving relative to the overall market. The volume's a little choppy, but it's trending up. Choppy meaning the market went up. The market came back down on a 2-day pullback. It still had stronger pattern. Bottom line, it's still in a daily buy. So the volume trend was up. you know, if you bought it here, would you have gotten out there? Would you have sold it here? I don't know how you would trade it, but looking at the market itself, I mean, I can't tell you what I think of this stock because it's just a tradable market. It's AMC. It's a movie theater that shouldn't be worth $43 in my humble opinion. It's absurd. But here it is at $43. And it's because of a group of people that are, I would have to say, and maybe you disagree with this concept, but I would have to say in some degree are legally manipulating the market. And it just a bunch of people got together and said, hey, buy the crap out of this and let's squeeze the stupid hedge funds who are still short. God bless them. Go for it. Go get them, man. You know, but this is not a long-term investment theme. This is predicated not on the company fundamentals or the dynamics of the industry itself of people going to the movie theater. This is predicated on buyers ganging up against short sellers. End of story. All right. And that's my humble analysis and opinion. Do the indicators reflect the movement of investors and the price action relative to the S&Ps? And the answer is absolutely. That's AMC. The one of the other ones was gave me like 8 or 9 of them. I'm only going to do a couple more. JMIA is another one. Jumia Technologies. I mean, I don't know what to say. I mean, volume here, no one came out of the trade. It's probably the relative strength is starting to see some relative improvement. There's some decent volume over the last couple of days. You know, the trade's good until you start to see a massive key reversal out of volume. Are the indicators working? PPS sell signal volume went down. Relative strength was weak. Yeah, shorts work. So the last known sell signal was over here on July 1st. The next new trade signal came in on August 24th with a daily buy signal and an uptick on OBV. So that's Jumia Technologies. I don't know anything about that company. I'm sorry. I know it's a Beyond Meat. I know BYND, Beyond Meat. You know, maybe the good news is I can help share with you how to read these tools. Beyond Meat. Prior to this bottom, it had a sell signal here. The market didn't go anywhere, and then finally just absolutely puked. The market generates a buy signal, flat line on volume. The relative strength starts to improve relative to the market. As you can see, lining it up, the relative strength improvement occurred. Volume, and if you look at the price on a closing basis, they're down, and the on-balance volume is not really moving anywhere. And then all subsequently, you get a buy signal, and the next thing you know, the volume is definitely trending up. The relative strength's improving, and you could say, gee, maybe I'm going to chase that trade. You don't quite have the same type of volume trend in the last couple days. You had a buy signal here. The volume was up a little bit. Relative strength sort of improving. It's not trending in as positive as it was back over here. This is Beyond Meat. All right. So the bottom line, does that make it a bad stock? It just means that it would need better volume trending higher, take out another high. And if the market does, it would probably illustrate that the market is breaking out a little bit greater. So bottom line, if you're interested in taking a Beyond Meat, if tomorrow, the first hour, the market starts to trade higher on strong volume, it would say, hey, man, the boys are back in charge. The bulls are buying, and that's how you can trade. So are the indicators helpful on the stocks that you asked me to look at? And the answer, well, you can make your own determination. It seems that on-balance volume has definitely helped to support the or illustrate the buyers in the market. And that's the takeaway there. So again, Jerry, I thank you for your question. And that's the validity of the indicators. They work even on the market that we're here. We did have a new individual that asked me about looking at the trade room. And just briefly, I know I should have spent a little bit more time on this. My bad. This is a model we call which we put together back in, I think, the late 16, early 17 at a seminar we did back in Las Vegas. This is based on a $10,000 account. This trades in our room. It posts the trades on this as soon as they're executed. It lists the entry, and it posts the entry in the trade. So current position, it re-entered a long position. It was long, it exited. So it posts what the trade is. It's based on a $10,000 account. There's the performance graph, periodic returns, year to date. Performance graph looks like July over the last, 4 years now. Since January of 2017, July is a pretty bad month. September is a pretty active month over the last 4 years. And the best performing month for Bitcoin has been in December because two of the greatest wealth creation or biggest moves occurred in the months of December. That's one market that we have that trades live in front of everybody. This is another market. This is SPXL. It's the leveraged version of the SPY right here. Looking at it, has another periodic return, which has been fairly decent this year. It's down right now from a year-to-date basis on the SPXL. The overall performance graph, if I may be so bold, that's why it's down. It had a peak performance in April and hasn't done squat on the leveraged ETF version. The SPY version just came off of hitting a brand new equity high. Its performance summary is doing pretty well. Its periodic return, it's making money as well. This is based off on the SPY, a $10,000 account. So year to date, you can clearly, if you're up 34% on a $10,000 account using the SPY model. We also have SQQQ, which is a 15-minute model. It's an inverse on the NASDAQ. This one takes longs and shorts. This is based off a $20,000 account size. Every different one has a different account size value because of the volatility associated with those markets, right? So Bitcoin's pretty volatile. You don't want to throw $100,000 every trade you get in unless you have $2 million. SPY is a little less volatile than Bitcoin, so therefore they're different size equity starting positions. So on the SQQ, the performance graph that's at a new equity high for the year, periodic returns. This year is doing, well, I would have to say pretty good. So based on the account size of $20,000, your periodic return at $20,295 in the last 12 months. So far, year to date, $5,700. Not bad performance for the live trade room. I hope I answered a couple of those questions. We can also go through, and I didn't want to take the time, but the individual had asked for it. I know he's here tonight, and I said I would go through those numbers. We can obviously do that during the live trade room session, which we do anyway. Generally speaking, I go through these performances at probably mid-month, every month, the middle of the month, the end of the month, just to see where we're at. And that's what we do in the live trading room. So that runs every day in the algo room along with the ES model. And I forgot to mention, it's a short-only VIX model, the VXX. But again, I'm sorry to take your time. That's all the time we have for tonight's PUG meeting. I hope you found interest. This was worthy of watching again, especially in setting up the scans, looking at qualifying information of the condition of trades. So one of these days, we're going to stop making new annual highs in the market. And we're going to look at rotation. And already at the end of the day, it was interesting. We got Jackson Hole, Wyoming, and it looks like we've got interest rate sensitive sell-off, or at least on a 60-minute basis as we left today. So that could have been someone did. Maybe they just decided to take something off the table. And then tomorrow morning, they come right back in it. So it seems we open higher, we trade higher during the day, a little bit of sell-off at the end of the day. One of these days, things are going to change. So that's where knowing what to look for and how to spot those changes without someone saying, hey, flip a coin or roll the dice. And I do have a dice, and it says finish up and say goodnight. No, it doesn't. It said hedge. I just rolled the dice. So George Volley, thank you so much for attending. And Anthony, I see you. Thank you very much. Everyone, Julianne, rest up. Have a great evening. And I'll see everyone in a live trading room tomorrow. I hope you enjoyed tonight's presentation. Jay, peace to you, my friend. We miss you, big guy. Thank you. I hope everything's well out there. Bonnie, I can't believe that you're in California. First off, you got to live with Joe, and then you got to deal with me. Unbelievable. Thank you so much for being with us tonight. You guys are fun. You made it fun. Thank you very much. I mean, Jerome, I mean, you forgot to tell me the name. What was the name of the place, the restaurant out there in Woodbridge? It's Woodbridge. It's Woodbine, or Woodbridge. What the heck's the name of the restaurant, Jerome? It's on the tip of my tongue. Well, neither here nor there. Everyone, have a great evening. I'll remember it. It'll be 3 a.m. I'll wake up and I'll go, I know what it is, but no one's there to listen. All right, have a great evening, everyone. Thank you.